We are joined by Andy Mantel, founder and managing director of Pacific Sun Investments. His Hong Kong-based China Mantel hedge fund has beaten 89% of peers last year through investments in those A shares. Now, he has since sold them off. And he joins us from Tokyo this morning. Andy, good to have you with us. What did you think about that rally on Monday? Would that encourage you to maybe put some money to work again in the A shares?
Not necessarily. I think it was a one-day move. We've been out of A shares for probably about 9 months right now. We run more of a value growth type fund where we're looking at companies trading at 5-6 times earnings on the long side. And we don't really see that right now in the A share markets. The markets are not a bubble right now, the equity markets, and we are keeping tabs of it. But I think we're probably getting closer to year end where we get more interested in the A share markets and getting some exposure in that area.
And what would tempt your interest at the end of this year, considering people are saying that China's going to put off on all these tightening measures now with the euro debt crisis?
Well, last year the earnings were very good. Some of the earnings will be through investment gains through last year's very strong market. So we want to get a better feel of how companies will be doing in the domestic market for themselves. Primarily, we're looking at more of the banks and the properties, which we have been more of on a net short basis. I think that, we never have more than 10% in the A share markets. Again, we're looking at good value companies that are listed outside of China that we think you can get better investment opportunities.
Okay. Hey, Andy, so what about that bounce back for those property names yesterday? I mean, you told us to short them, or you've been shorting them for a while. You expected a further 20% decline last month. What about now? Are they looking attractive now?
Well, we make most of our money on the long side, and when we do short, it's usually for about a 6-month time frame on average. We have been shorting the property company since last November. Yes, we have done some short covering last week, in fact, and also ahead of the ex-dividend payments for some of these developers. Now, I'm not actively going long this area, and if there is more of a rebound, we can go, get some more short exposure to this area. But we have covered some of the shorts that we have had. Right now, we are long property a little bit and also short at the same time. So it's more of a net basis right now. I'm looking more at the banks for downside for the rest of this year.
Okay, Andy, let's quickly get into some of the stocks that you are still buying, because you still like the consumer theme. You still like Skyworth. We've been talking about that for a long time now. Also, Jutong as well. And, people looking at these prices say, yeah, we've seen a lot of gains recently. In fact, I think Skyworth was the best performer in the Asia Pac last year. So is it still worth buying into at these levels?
Well, we made a lot of money with Skyworth last year. We actually reduced our position in the last 2 months for this one. We're looking at the numbers that they're having on a month-to-month basis as far as selling the refrigerators, et cetera, their televisions. And the growth is slowing a little bit, but last year sales was phenomenally strong. So we want to get a better picture of how the sales will be for the rest of this year. So actually, for Skyworth, we are out of that one right now. We did hold it for perhaps 2 years or so. We made a lot of money on it.
What about China Green? This is a food and beverage maker, up just 4% this year, but looking pretty cheap at 11 times earnings. Are you still holding this one?
Well, up 4%. Their peers are down 20%. We bought the stock back around at $4.50 or so, during the crisis. We had held it since the IPO at $1.28, sold most of it at over $10 in May 2008. We do like this company. Once again, it's very cheap. It's half the valuation of its peers, Tingyi Noodle and Want. The sales of the beverages, instant noodles, are doing exceptionally well, and it's still growing at 35% or so, trading at maybe 8 times next year's earnings.
Okay, Andy, thanks for your time. Enjoy Tokyo. Andy Mantel, founder and managing director of Pacific Sun Investments.